Hello traders, welcome to the weekly Forex forecast for the 13th of April. My name is Andrzej Shanetsky. I'm a technical analyst at AAFX trading company, and traditionally we begin our forecast with the Euro-USD currency pair. After the release of the payrolls on Friday, the price tested the level of support 1.2227 one more time, but failed to break it down and then showed an abrupt growth. As you can see from the chart, now the pair is trading in the local consolidation between two strong volume levels. The first one is a support and the second one is the level of resistance 1.2342, 1.2357. If we take a look at our volume chart, here we can note that large volume is concentrated within this consolidation. Thus, the best decision with the euro is just to wait for a confident exit of the price from the range. The breakout movement must be sharp and supported by the large volume, which will be a more reliable signal for entering the market. While the price is locked within these two strong volume levels, we should skip this instrument from our trading plan. The pound. The price also showed an abrupt growth on Friday and now is testing the level of resistance, the upper limit of the local consolidation 1.4095. Let's take a look at our volume chart with this instrument. Well, here we can note that the movement was supported by the large volume, which is a good bullish signal, and given the fact that it is testing the level of resistance, we can and should consider a scenario of the breakout of this mark, which will allow us to open long positions with the pound. The breakout movement must be clean and supported by the large volume. A stop loss should be placed below the breakdown volume bar, and the first target is the previous level of resistance 1.4240. So with the pound, purchases after the sure breakout of the level of resistance on the large volume. Our next instrument is the yen. The price tested the level of resistance one more time, it's 107.48, and then showed an abrupt fall. The drop of the price was supported by the large volume, so it's a great bearish signal, and even despite the fact that there is a local uptrend, we can consider a scenario of opening sales. We can enter the market after a smooth upward correction of the price in order to get a better entry point. So here we can open sales. A stop loss should be placed above the level of resistance, and then we wait for further fall of the price. The first target is the level 106.15. So this is our target. If the price continues growing and breaks down the level of resistance, we should roll over and open long positions. But still, at the moment, sales are in priority. And our last instrument for today is gold. After the release of the payrolls, the price tested the level of support, the lower limit of the local consolidation 1323.10, 1324.40, and showed an abrupt rise. Moreover, the upward movement was supported by the huge volume, which is a great bullish signal. So even despite the fact that now gold is trading in the local consolidation, we can consider a scenario of opening long positions. We can enter the market after a smooth downward correction of the price in order to get a better entry point. A stop loss will be placed below the test of the level of support, and then we wait for further growth of the price. Our target is the upper limit of the consolidation 1355.70. So with gold, long positions after a smooth downward correction of the price. By the way, if the pair continues falling and breaks down the level of support, we can roll over and open sales here, but still purchases should be in priority at the moment. Let's take a look at the sentiment of the market. This indicator confirms our scenario with the pound, the yen, and with the gold, so it's a great additional signal. And I remind you that we trade against the crowd. With the euro situation is 50-50, so we need to wait for the exit of the price from the range, and only after that we can regard new deals here. So for today it's all. Thank you guys for watching. Hope this forecast will be useful for you. See you. Bye bye.